All right, guys, so here we are on the Pound Canada break and retest trade, already down about $222 because of a bad spread and a bad fill, but that's okay. What we're going to do is I'll let you guys know how this trade plays out as it moves forward, tell you all about the reason behind entering this trade, and then we'll take a look at the results directly afterwards. Okay, so let's go ahead and dissect this trade on the Pound Canada. Firstly, what type of break and retest pattern am I using? This is a bullish trend continuation, break, why'd I put a D there, and retest pattern. So what I was waiting on in this case is the market to break and close above the previous highest high. In that case, I have my valid break. After my valid break, I'm waiting on a retest of this level of resistance that was just broken. That's exactly what we get here. And for this specific trade, because we didn't have a big break, and what I mean by that is this candle broke and closed above, but then we closed right back down into my zone. I don't love seeing that. So whenever I see a situation like this, where my conditions, the break of this previous resistance level, are not perfect because of the fact that the next candle came back down into my zone, that's when I start looking for that most conservative entry. So that's exactly what I did here on the Pound Canada. After seeing that, I dropped down. I'm on the 1 hour chart right now, looking at this break and retest. Then I dropped down to my 15-minute chart to see if I could find an entry. All of my stuff just got deleted, but this is the zone of resistance we were looking at. Once we got down into that zone of resistance, what you'll notice is that on the 15-minute chart on my lower time frame, I did in fact end up getting a nice double bottom with a green candle at the end, showing me buying pressure and giving me all I needed to enter this trade. I have to get out of replay mode in order to show you guys the results so that my drawing tools will be on there. But that's exactly the reason for entry. For my stop loss, I just put a stop below the lowest swing low of that double bottom, which at the time was right here. The market did play around, get kind of close to my stop loss within about 4 or 5 pips, but it did not stop me out. And then the market continued higher and did in fact hit my target for about a 2-to-1 reward to risk ratio on this specific trade. So that's how the Pound Canada trade that I had this week played out. Also had a losing trade that I want to show you as well on the Euro Pound. No need to do market replay or anything like that here or to show you my entry, because I wouldn't be lying about entering a losing trade, right? So here we are on this trade, and this was a perfect example of the descending triangle with lower support levels coming in at a similar level of resistance. The breakout, it was beautiful. The market pulled back. I got selling pressure just using the conservative entry here. We get into my zone, we put in a red candle, that's selling pressure. I jumped into the trade, but unfortunately the market did not cooperate with my analysis and just stopped me out, which, by the way, guys, will happen a lot. Remember, even with the conservative entry, it's important to have a decent reward versus your risk ratio because of the fact that you're still probably going to get between a 50 and maybe 60% chance, depending on the currency pair and market conditions, of winning trades like this. So you need to make sure you're having a decent reward to risk ratio. But with this being the case, again, this did end up being a losing trade, but I got a 2-to-1 on the Pound Canada trade. So I was still up by 1 R, and R just stands for the amount that you risk per trade. For me, it's 2%. So I'm still up 2%. And I had one more trade using this break and retest on the Euro Yen. I didn't record myself entering this trade, but I did send it out in email analysis, which is something that EAP members of our VIP group get 3 to 5 times per week. And for this trade, what I was looking at is another trend continuation retest, but I could enter this trade a little more aggressively because of the big breakout we got. So we have our previous low here, pushing up to a higher high, pushing down to a higher low, breaking our previous level of resistance after my valid break. And since we do have candles continuing to trade above this previous level of resistance, I can look for the regular conservative entry. So when we get this pullback after the break, the retracement, break and retest, we get buying pressure, green candle, a big hammer candle right after that green candle. That gave me what I needed to enter the trade. As you can see, again, I'll have the actual email analysis I sent to traders on the left-hand side of your screen, so you can see that I entered this trade. Now, for my own personal stops and targets, I use a more advanced way of taking stops and targets with 2 positions, and my first position having a 1-to-1 reward to risk ratio and moving my stop to break even after my first position does get filled, which happened here. So I got stopped out for break even on the second part of that position, but that's a little more complicated than I want to get into here on YouTube. Now, Again, when you're trading, knowing that information is not enough. You're not going to be profitable because you know that. Your steps of becoming a profitable trader consist of what I call the triangle of trading success. What this is a strategy that gives you an edge over the market. And inside of this triangle are all the money-making traders that are already consistently profitable. And this is the reason they are. They have a strategy that gives them an edge over the market. If we were talking about this strategy, the break and retest strategy, they could have a strategy that's 50% accurate and gives them a 1.5 to 1 reward to risk ratio. As long as that consistently plays out, then they have a strategy that makes money over time. But they also, there's more to it than just having a strategy. They also have a risk management plan that keeps them from blowing their account and keeps them out of their emotions while they're trading. This is a huge problem for traders as well, and something you will have to master before you ever become a money-making trader is your risk management. You need to be risking less on trades, probably. You may be someone who's already mastered risk management, but the likely scenario is that you haven't and you're still consistently risking too much every time you place a trade. And thirdly, they have the discipline to stick to the rules of their trading plan. They have the discipline to stick to this rules-based strategy that's created through what? Conditions, entries, stops, and targets. I just gave you a few options for all of these throughout this video. They also have the discipline to stick to the risk management plan that keeps them from blowing their account. They're not revenge trading and starting to risk 5 to 10% per trade just to try to make money back. And they're able to stick to that strategy and risk management plan, which eventually leads to them becoming profitable traders. So again, as I said earlier, you're not going to be a profitable trader just because you know how to spot these patterns, okay? What you need to do at this point, your next step, is to backtest these patterns. Pick an entry that you think fits your trading style best, whether that be the aggressive, the conservative, or the most conservative entries we talked about earlier. Most aggressive, that's the wrong letter, most conservative. Whether it be any of those, pick one that you think best fits your style. Then go through market data, historic data, look for each time these patterns happened with that specific entry that you pick and with whatever stops and targets you choose to use, and see how it performed in historic data out of the last 100 times it happened on a currency pair and on a specific time frame. If that provided an edge over the market, let's say yet again a 50% win rate with a 1.5 to 1 reward to risk ratio, then you know you have a strategy that's proven to make money over time. And at this point, you have the first part of becoming a profitable trader. That is the worst triangle in the world. But at this point, you would then have your strategy, and then you would just need to work on risk management and discipline. But this video is getting super long already. If you want more help with all of what